Check out this trade right here. I am up over $4,000. And what's crazy is this trade was confirmed by something almost nobody pays attention to. It's not an indicator. It's not some magic pattern. It's a clue inside the candlestick that tells you when momentum is actually shifting. Once you learn this, your entries get cleaner, your stops get tighter, and you stop taking those trades that look perfect, but instantly reverse on you. So in this video, I'm gonna show you exactly what I'm looking for, how I trade it in real time, and I'll also show you the fake out versions, so you know what is real versus a fake signal. Okay, so this right here is the candlestick that confirmed the trade entry. And if you're thinking that's just a big green candlestick, whatever, right? Obviously that means the market's more likely to go up. That's exactly the trap, because minutes before there was a big bullish candlestick, it actually turned into a trap where the market reversed on it. What most people do is they only study what the candlestick looks like after it closes, but how and where it forms can tell you a completely different story. And this is the part that will level up your trading. A candlestick can finish looking super bullish, but it can form in a way that shows you it's fake. And that's how traders get baited into horrible entries. So I'm gonna show you 3 versions of the same candlestick, and I'm telling you right now, they don't all tell you the same exact story. So here are 3 candlesticks that when they're closed look exactly the same. Now this can work on a 1-minute chart, 5-minute, any type of chart, a daily chart. The key is to realize that even though the candlesticks close like this, how it's formed can completely change what it tells you. And so first example is this could form while you watch the candlestick form. The market could start here and slowly trend higher with little pullbacks in the middle. That is a healthy trend. And so this is a really good case to show that, hey, yeah, the market's being really bullish in this candlestick. Most likely it's a strong signal. Now the next example is where the market opens up, moves up, has a pullback in the middle of it, and then pushes higher. In this case, this is also a healthy example because the market's had time to pull back in this candlestick. Now, the third option is where the market just shoots straight up. This is where a trap can happen because this is an unhealthy move that the market does, no matter what time frame you're in. Even if you're in a 1-minute chart, if the market moves straight up with no pullbacks, even over 60 seconds, it's not going to be healthy and it's likely to give it back up. And we'll go into situations because it's not just about reading this specific candle, it's about seeing these in certain areas in the market, and they'll help you key into what's the potential outcome. Okay, so watch this candlestick form right here. It opens here pretty much, chops for a little bit, and then just shoots higher. And so what that does and tells me is it's made a spike higher that in a choppy environment is more likely to instantly get reversed the next candlestick. And so this is something that you can read into during when you're watching the market. Even if you see a big bullish candlestick or even a big bearish candlestick, here this candlestick does a huge move lower. And so, I used to think that, oh wow, huge move lower, and it closes basically as a huge big bearish candlestick where, opened here and closed here at the lows. In candlestick theory, that would be a huge bearish signal. But because it happened in an unhealthy way, in a market where it's just choppy, again, looking at that kind of more bigger picture and trend that the market's in, you can see the next candlestick just immediately reverses it. And so this is where you want to be not just blindly looking at the candlesticks, you want to be reading what they're telling you in relation to the larger picture. And so even when the market breaks out here and breaks out of this kind of range, it gives that back up because it's in a choppy mode. But if you can read into this, there's a couple signals here that tell you it's starting to shift. One is, okay, this is a big red candlestick. You can see that seems like a huge signal to potentially go lower, correct? But if this candlestick gets reversed, the way I read that as, well, this was an unhealthy move that immediately reversed. And in the bigger picture context of things, looking at, okay, we have a downtrend and now it's starting to make higher highs and higher lows. It has a potential to go higher. And so this is where I see as a strong candlestick, this big green candlestick tells me, even though it formed very quickly, if we actually zoom back here a little, you can see that it has little pullbacks as it moves higher. And so that also tells me that it's got a little bit of a strength in it. And as well, giving back this unhealthy move previously, this candlestick, that is part of a larger pattern playing out. And so that's how I confirm entering my trades, is when patterns and the candlesticks show you that they're actually following through versus, having that potential follow through being an area that doesn't make sense. So check out this trade right here. This is a trade I previously took, and I'm looking for a head and shoulders pattern here and a break above this high. So look at how this candlestick forms. It comes up and it pulls back mid candlestick, showing that healthy pullback, and then it pushes higher and actually breaks this high. And so I look to jump in as it breaks that high, and then it actually even pulls back a little bit and fills me. And so that's a big bullish candlestick. But because it has these pullbacks in it, it shows more strength. And that combined with this bottom down here that it put in of a higher low, it helps confirm that the bigger picture is happening and I can look for a larger move to play out. That's how reading into the candlesticks really plays out. And then I put my stop loss below that big candlestick because it's a good confirmation and it shows strength. When these big candlesticks have strength behind them, they're more likely to hold, because the market has had a strong move in that direction and it's been a strong, healthy move in an area that makes sense for it to have that kind of move. Going back to the previous example, where before I entered the trade, the market was having big candlesticks in either direction, but there was no bigger picture behind them. Now, another way to avoid potential traps is, here we have an example from actually a couple days ago in the market where the NASDAQ here pushed higher and then started to sell off. And so this right here was an unhealthy bullish candlestick where the market just shot up and then it gave that whole candlestick and some back up. And so this can be a good signal of a topping pattern. But in this case, you don't want to just short when you see this pattern alone. You want to wait for something like this to happen, of the market to make another attempt to go higher and then reverse. And this candlestick does a great job of showing you that, because it opened up here, pushed higher and reversed. And so if you play this out with that in mind, the candlesticks, the price has basically put in a double top here. But just using this candlestick alone and jumping in on a short here to bet the market's going to go down would lose you money, because you're not confirming that it's making a lower high. You would have to wait for it to break this low here before betting that it went down, because otherwise, in this case, this can happen where it came here, pushed higher, pulled back, and instead actually made a double bottom after it made a double top. And the reason why this happens is because it comes up to an area where it's likely to find some resistance, but this trend is strong enough to where it, just takes a second to regain some strength and then break through that. And so that's why you need to be with your candlestick patterns, is take into account the big picture. And so I've created a PDF that has my favorite candlestick patterns in it that will talk about the theory and the reality behind them and what's actually important to this pattern and what's actually unimportant factors that trip people up and they think are important about. And so I highly recommend getting this. You can get it in this description of this video or this QR code. And so if you want a deeper dive into how I read the bigger picture trends and understand the whole overall market and what the likely direction of it is, check out this video right here. It'll go into in-depth details and signals that have taken me years to understand.